Is your insurance a lifesaver or a money trap? When it comes to insurance, it's often a matter of finding a balance between what you need and what you can afford. But what happens when your insurance policy is more of a money trap than a lifesaver? It's important to understand the ins and outs of your insurance policy so that you know what you're covered for, and what you're not. Otherwise, you could end up paying more for your insurance than you need to. In this video, we'll take a look at some of the ways that your insurance policy could be a money trap. We'll also offer some tips on how to avoid it. 1. Many people think that their insurance is a lifesaver, but it may be a money trap. 2. There are several things to consider when determining if your insurance is a lifesaver or a money trap. 3. One thing to consider is the type of coverage you have. 4. Another thing to consider is the deductibles and copays associated with your policy. 5. You should also consider the financial stability of the insurance company. 1. Many people think that their insurance is a lifesaver, but it may be a money trap. If you're not careful, you could end up paying more for your insurance than you need to. Here are a few things to watch out for. 1. Make sure you understand what your policy covers. Some policies will only cover you for certain types of accidents or illnesses. Others may have exclusions that you're not aware of. If you're not sure what your policy covers, ask your agent or insurer. 2. Know what your deductibles are. Your deductible is the amount of money you have to pay out of pocket before your insurance company starts paying for your medical expenses. If you have a high deductible, you could end up having to pay a lot of money out of pocket if you need to use your insurance. 3. Be aware of the effects of pre-existing conditions. If you have a pre-existing condition, it may be excluded from your policy, or your insurer may only cover a portion of your medical expenses related to the condition. Make sure you understand how your policy handles pre-existing conditions. 4. Know what your copayments and coinsurance are. Copayments and coinsurance are the amount of money you have to pay for each doctor's visit or medical procedure. These can add up quickly, so it's important to know how much you'll be responsible for. 5. Check your policy limits. Your policy may have limits on how much it will pay for certain types of expenses. Once you reach those limits, you'll be responsible for paying the rest of the bill. 6. Beware of policy lapses. If you let your policy lapse, you may have to pay a higher premium to get coverage again. In some cases, you may even be denied coverage. 7. Don't wait to get treatment. If you need medical treatment, don't wait to get it. Some insurance policies have time limits on how soon you must seek treatment after an accident or illness. If you wait too long, your coverage may be denied. 8. Review your policy regularly. Your insurance needs may change over time. Review your policy regularly to make sure it still meets your needs. 9. Get quotes from different insurers. Insurance companies offer different rates for different policies. Get quotes from several insurers to make sure you're getting the best rate. 10. Compare benefits and costs. When you're comparing insurance policies, don't just look at the premium. Look at the overall benefits and costs of the policy. Make sure you're getting the coverage you need at a price you can afford. 2. There are several things to consider when determining if your insurance is a lifesaver or a money trap. There are several things to keep in mind when trying to decide if your insurance is a lifesaver or a money trap. The first is the type of insurance you have. There are two main types of insurance: health and life. Health insurance covers medical expenses, while life insurance covers death. Next, you need to consider your needs. If you are healthy and have no pre-existing conditions, you may not need as much health insurance as someone who is sick or has a chronic illness. Likewise, if you have a family, you may want to have more life insurance than someone who is single. You also need to consider your budget. Insurance can be expensive, and if you can't afford the premiums, it may not be worth it. There are also cheaper options available, so it's important to compare prices before making a decision. Finally, you need to think about your risk tolerance. Everyone has a different comfort level when it comes to risk, and this should be taken into consideration when deciding if insurance is right for you. If you are willing to take on more risk, you may not need as much insurance. there is no one-size-fits-all answer when it comes to insurance, and what may be a lifesaver for one person may be a money trap for another. It's important to consider all of the factors listed above before making a decision. One thing to consider is the type of coverage you have. One thing to consider when you're thinking about whether or not your insurance is a lifesaver or a money trap is the type of coverage you have. If you have a health insurance policy that covers you in the event of a major illness or accident, then it's likely that your insurance is a lifesaver. On the other hand, if you have a policy that only covers you for routine checkups and doesn't cover you in the event of a major illness or accident, then it's possible that your insurance is a money trap. Another thing to consider is the deductible on your policy. If you have a high deductible, then you may have to pay a lot of money out of pocket before your insurance policy kicks in. This can be a problem if you have a major illness or accident and you're not able to work. On the other hand, if you have a low deductible, then your insurance policy will likely cover most of the costs associated with a major illness or accident. The bottom line is that it's important to understand the type of coverage you have and the deductible on your policy before you can decide if your insurance is a lifesaver or a money trap. If you have a policy that covers you in the event of a major illness or accident and has a low deductible, then your insurance is probably a lifesaver. If you have a policy that only covers you for routine checkups and has a high deductible, then your insurance might be a money trap. 4. Another thing to consider is the deductibles and copays associated with your policy. When you're shopping for health insurance, it's important to consider more than just the monthly premium. Another important factor to consider is the out-of-pocket costs associated with your policy, such as deductibles and copays. Deductibles is the amount you have to pay for medical care before your insurance company starts to pay. For example, if your deductible is $1,000, you'll have to pay the first $1,000 of medical expenses yourself. After that, your insurance company will start to contribute. Copays are a set amount you have to pay for a medical service, such as a doctor's visit or a prescription. For example, you might have a $30 copay for a doctor's visit. Coinsurance is when you and your insurance company share the cost of a medical service. For example, you might pay 20% of the cost of a procedure, while your insurance company covers the other 80%. When you're considering a health insurance policy, it's important to look at the big picture. Yes, you want to find a policy with a low monthly premium. But you also want to make sure that you're not going to be stuck with a huge bill if you need to use your insurance. Look at the deductibles and copays associated with a policy before you make your decision. 5. You should also consider the financial stability of the insurance company. When you're looking for life insurance, you not only want to find a policy that meets your needs, but also a company that is financially stable. There are a few things you can look at to get an idea of a company's financial stability. One is the company's rating from independent rating organizations like AM Best or Standard & Poor's. These organizations rate insurance companies based on their financial strength and ability to pay claims. You can also look at the company's history. A company that has been in business for a long time is likely to be more stable than a new company. And you can look at the company's financial statements to get an idea of its overall financial health. Finally, you can ask the company directly about its financial stability. Companies are required to disclose this information to potential policyholders. When you're considering life insurance, take the time to look at the financial stability of the company. It's important to find a policy from a company that is financially strong and can pay claims. The question of whether insurance is a lifesaver or a money trap is a difficult one to answer. On one hand, insurance can provide peace of mind and financial security in the event of an accident or illness. On the other hand, insurance can be expensive and may not always cover everything you need. Ultimately, the decision of whether to purchase insurance is a personal one that depends on your individual circumstances. Thank you so much for watching. We hope you enjoyed this video as much as we enjoyed creating it. Don't forget to leave a comment below and let us know your thoughts. Make sure to subscribe to our channel for more amazing content coming your way. Until next time, take care and stay awesome.